Public companies like Google, Alphabet Inc. Closing parenthesis are financed through a mix of equity, debt, and the revenue they generate from their own operations. The most fundamental source of funding comes from their initial public offering IPO. Google went public in 2004, selling shares to investors in exchange for capital. This move gave it access to long-term funding from the stock market. Today, Alphabet stock trades under the tickers Google and GOOG on the Nasdaq. And while it rarely issues new shares, its public status allows it to tap into the market whenever needed for future expansion or acquisitions. Once public, a major portion of Google's financing comes from its revenue streams. Unlike early-stage startups, Google is highly profitable, generating billions each year primarily from advertising through Google Ads and YouTube, along with revenue from Google Cloud, hardware products like Pixel and Nest, and Google Play services. This consistent cash flow funds everything from research and development to infrastructure and global operations, making Google largely self-sufficient. Google also uses debt financing selectively. Though it has massive cash reserves, it sometimes issues corporate bonds borrowing money from investors and promising to repay with interest. Because of its strong financial health and credit rating, Google can borrow at low interest rates, which makes debt a smart, tax-efficient way to finance big initiatives. Additionally, Google reinvests retained earnings profits not paid out as dividends to fund its future growth. It also performs stock buybacks, purchasing its own shares to reduce supply and boost stock value. In some acquisitions, Google even uses its stock as a currency, offering shares instead of cash to acquire companies like YouTube, Fitbit, or DeepMind. If you found this explanation helpful and want to learn more about how the world's top companies are structured and financed, make sure to leave a comment, and subscribe to my YouTube channel for more deep dives into business, investing, and corporate finance. Thanks for watching.